The Financial Intelligence Act provides measures to protect the integrity and stability of the Namibian financial system against financial crimes, profits generated from committing such crimes, terrorist financing, and proliferation financing. To help fight financial crimes, the FIA requires regulated institutions such as banks to establish a customer's identity, source of income, and identify risks that may arise from the business relationship between the customer and the regulated institution. This mandatory process, which must be strictly complied with by regulated institutions, is called Know Your Customer and Customer Due Diligence. KYC and CDD assist a regulated entity, such as a bank, to flag any activity that does not match the client's known profile and to further interrogate the mismatch identified. The main aim of the KYC is to confirm the correct identity and financial profile of customers and clients to ensure they are not engaged in money laundering activities. The KYC-CDD is a legal requirement by the FIA on all FIA-regulated institutions to identify all natural persons and legal persons. To obtain KYC and CDD information, institutions may require different types of requirements for specific types of individuals, depending on their risk exposures. The public will be informed by their specific institutions on what documents or information they require for KYC and CDD verifications. Failure to obtain required information limits transactional monitoring and prevents institutions to detect and report suspicious illegal activities. Therefore, institutions may be subjected to FIA enforcement actions such as fines, service terminations, and licenses revoked should they not obtain adequate and appropriate KYC or CDD information from their clients. The list of identifiable information required when dealing with a natural person are Namibian ID, passport number or date of birth, Namibian residential address, source of income, source of funds, employment and occupational information, etc. When dealing with a legal entity, institutions are required to obtain information related to the registration of the entity, as well as who ultimately owns and controls the entity. Nature and location of business, source of funds, identify and obtain specific information on the natural persons who are trustees of, owns or controls the operation of the legal entity. However, institutions may require more information depending on their internal policies. Obtaining prescribed KYC-CDD information is beneficial because it 1. Helps to establish customers' identity and the nature of customers' activities. 2. Helps assess money laundering risks associated with customers for the purpose of monitoring customers' activity and enable reporting of relevant reports as per the FIA. Institutions may in some instances refuse to avail services or freeze an account belonging to clients who refuse to be fully KYC'd. Once a client's identity, source of income, and risk profile have been established by a regulated institution such as a bank, the institution must monitor all the client's activities on the account as per risk profile established to ensure all activities remain within the known profile of the client. This may require the regulated institution to also interview the client to ensure answers availed make business sense. Should the regulated entity not be satisfied with the answers availed, the entity may do a range of things to manage risks, such as restrict activities and services to be rendered to the client. The institution may also consider filing a suspicious transaction or suspicious activity report with the FIA. Let's unite and help keep our money clean.